X and YouTube now. 3 p.m. London, 4 p.m. Paris, 6 p.m. Dubai, 10 a.m. New York, although that was kind of a lie because we're 30 minutes later today. But what are you going to do? We had an amazing episode yesterday. Binance's new CMO, and I'm not usually big on having CMOs on the show because of the M part of their title, but it was a particularly interesting conversation because we had to talk about the tokenized SpaceX stock, what happened there, and the many threads that were running through Binance and the news yesterday, which ended up being far more than I anticipated. So it's a really, really good episode with Erwin Chen. Make sure you check that out. And a quick reminder that tomorrow we have BlackRock coming back on the show. It's Jay's second time on the show. And we're going to be discussing the new Bitcoin ETF with yield. So there's a lot to discuss there. There's a real conversation around productive assets. So that'll be another belting episode. And then on Friday, I think we have Wallet Connect. Today, however, we have a big conversation. Now we have two people that you can obviously see on the screen right now. One is Andrew Isaacs, who is the co-founder of Neyro and the COO of Aurum. And Andrew and I had a conversation on camera about a week ago, probably a week ago to the day, in New York at ETH conference, which was really, really interesting. And essentially, I want to go further down that rabbit hole of Neyro. And then I don't know if you need introduction anymore. Michael van der Pop, one of the most famous faces and names in the space. Michael, I don't know if you know this, but I've been creating content in this space since 2017. And when I joined Cointelegraph, they asked me to join to create a daily podcast. And the daily podcast was essentially a rundown of the news and stories around trading and bits and pieces like that. And you were like a primary source. And you were always given credit for your fine work, but I was referencing you for all trading information basically from the start. So it's great to have you. I know you've been on the show a few times, but it's great to have you back. And I'm sure my ex-co-host Gareth will be sad he's not sitting in on this. Okay, let's get started. So for anyone unfamiliar with Neyro, I think this is probably the best place to frame the conversation. Andrew, can you give us a background on what Neyro is and what problem it solves?
Absolutely, and thanks for hosting me, Robert. It's good to see you again. It's been about a week, and Mikhail, obviously a huge fan and supporter. I've followed you for many years in the space, so really excited to be here with you both today. Keying off just with the sort of overview of Neyro here. Neyro is a non-custodial, and that non-custodial piece is critical. It's a non-custodial AI trading platform where the user sets a strategy and risk, and the agent will execute on-chain. The most critical piece here is funds don't leave the wallet. These trades are executed, or the agent is entered into by way of a smart contract. Core products that we have is obviously our Neyro Dex, Neyro Agentic Trading, and our first live agent, which is called Quantum Alpha. Access to Quantum Alpha is currently available through selected partnerships and referral programs. But honestly, this is built for traders who want automation without giving up custody or transparency. And you know, like many things with AI agents, just adding that extension 24/7 to everything else you do in life. We obviously, and as the market knows, you know, that having an agent to execute on your behalf is where we believe the market is going, and expect to see things ramp up pretty significantly on that front.
Yeah, it's interesting. It has ramped up really quickly, and so there's a big thread that we're going to discuss for basically this entire show, I imagine, which is the security element of this, because that's something that can fall through the cracks. And AI has proven to be a sort of double-edged sword on this front. We've seen a lot of innovation, but it's also found some cracks, which it has wormed its way in, and that's caused some issues in a number of different areas. Mikhail, I want to come to you. When it comes to AI, how much has it changed what you do?
Well, I think a lot, to be fair. I think I've said it in the previous time that I was here, and thanks again for having me on. Also, Andrew, pleasure to meet you. In terms of like AI and the amount of growth that we've seen in all aspects of the enterprises that we have. So in terms of editing podcast episodes or learning more about how the algorithms work when it comes to social media content, that has speed up quite heavily. But also on the other side, in terms of trading, we are building quant strategies. And before AI really took off, we had to do it manually. But now, within a week, we can do updates that normally would have taken 3 to 6 months by multiple developers to actually find, issue, and execute those problems. So the efficiency is enormous in that aspect. So you can start to expand faster than before. However, the tricky part with AI is that if you do not understand completely what it is doing and you don't have a proper strategy that you want to utilize with AI, then it can also direct you in a negative loop. So it's like, in that sense, it's also a double-edged sword. Like, if you are a bad trader and you don't know how to trade, it's not going to bring you a trading strategy that is going to be profitable from the get-go. No, it will lead you into a strategy that's going to be negative even more.
Oh, have we lost Michael? We may have.
Because that's the loop that it's stuck into. So that builds.
Sorry, we lost you for a second, Michael. We've got you back now, I think.
I don't know where I got off, but
The AI wasn't happy with what you were saying, and so it decided to just,
yeah, it found a bug in my internet, I guess.
Exactly. It was like, come on, you're off script here, man.
So in short, I think AI has made it a lot more efficient to trade and to execute those trades, to automate the quant strategies, but it's not giving us the edge. Is all within the human's mind, and AI can even speed it up a little bit more. But that's how we see it.
It's funny, you said something similar to what Eowyn said yesterday from Binance. She said that essentially you should still be the CEO and AI should be making some decisions, but not the big overarching decisions. That should still be dictated by you, and the direction should be dictated by you, which I think is interesting. Mikhail, one more question for you. Do you think, I mean, I don't know when you got into the space, but I think you got in before I did. Do you think AI might end up being the biggest evolution we've seen?
I think it will. It will change our lives by a lot, but currently we are in an AI bubble and it's a little bit overhyped. I think the entire, I've been using all the versions of Claude until now, and I think Claude Opus 4.1 was a real game changer. But if you look at Fable 5 for the few days that I've been using it, it's not that much marginally better. It's just a new Apple iPhone coming out with a different camera and a different layout or whatsoever. It's not that special as a lot of people are giving it. But I think ultimately, yes, it will change our lives, just like internet has done it, just like blockchain will be doing it. So in that sense, I think it's a big breakthrough, but we are getting to the end side for now on what we can achieve with AI, I feel like.
Yeah, you mean the few days that you got to use Fable, right?
Yeah,
Because
yeah.
Trump rugged us. I was in the middle of making it build me a World Cup predictor when I got rugged by Trump, and it didn't even finish it. It took away all the results. For anyone that doesn't understand what I'm saying, Trump made it so that Claude's latest model Fable isn't available outside the US, including to Anthropic employees who are outside the US, which is a different problem. Okay, look, Andrew, I want to come back to you. Firstly, for any thoughts on this so far, because, I mean, Mikhail's made a number of interesting points. Do you have anything to add there?
Yeah, I mean, the only thing I agree with a lot of what he's saying. The one thing that always sits at the back of my mind is, I think, the rest is still unwritten. I don't think we, just as a layman here, truly even understand what the capabilities are, right? And so we're utilizing to the best of our ability, products and next gen solutions that are becoming available. We don't necessarily have an insight as to what the future holds, especially as these agents or as AI, just more holistically develops its own level of intelligence. And so I think it's actually really difficult to sit here and predict the future, because I would say most people have no idea the true power that we're beginning to unleash here for better or worse, right? And so I agree with Michael. There's always a lot of hype and something's new and everyone wants to test it, but we truly, in my opinion, might be just scratching the surface of what these true capabilities are, and that is both exciting and frightening at the same time. And what I would agree with Michael is with Michael, sorry, is I'll get it right. I'll get it right about 5 out of 10 times, or I'll just keep switching, keep you on your toes. But you know, an agent for whatever you're doing, right? Until it's thinking completely autonomously, right, and disregarding what you want it to do to some degree, it's going to push you in the direction that you were already going, right? And you know, we've seen that even with some just regular agents out of whether it's ChatGPT or Claude, right, tending to not push back against what you're looking for, but find ways to agree with you and then further accentuate what you're trying to do. So if you're on a misguided path somewhat, you really have to monitor that closely, that it's not just giving you more ammunition to continue heading down that road at a faster space. So I think whatever avenue you're heading into, right, whether it's engineering, whether it's trading, whether it's crypto, you know, first having your fundamentals done correctly, and I think, look, that's one of the things that we like about Neyro, right? Is there'll be agents that you'll be able to copy trade from. So even for the more novice trader, right, we're not expecting someone to, you know, develop their own wonderkind strategy overnight to come up with that. It'd be like, hey, here's some of the leading agents. You can copy those and set some of your, you know, adapt it, should I say, some of your risk parameters around that, but not expecting folks, novice traders, should I say, to start from scratch, because that could just, you know, be a fruitless exercise.
Mikhail?
I mean, I think when it comes to AI, I think within trading, it becomes deflationary for any complex strategy. Because if you go back in time 10 years ago, if you wanted to build a complex quant strategy, you needed to hire 15 developers to actually build the strategy with a lot of knowledge. And right now with AI, it's becoming way easier for yourself to build a strategy that you can then execute. And that's the second part. Like all our brains are some version of AI anyways. However, we become tired. We have other emotional things. So like I've hit my toe, so I cannot trade properly, or whatsoever is happening to actually make us less optimal. And an AI agent can execute 24/7 within the framework that you have designed based on what you have in your mind. Because right now, AI cannot be creating anything new yet. It's just a reversion of whatever happened in the past already. So that creativity comes from your brain. And if you place that into an AI agent, it can like trade efficiently for whatever time it can do that. So those are like the biggest breakthroughs, which is lowering the cost of building a strategy and which is optimizing the execution of building an AI agent for your personal trading, which I think Andrew agrees on with what he is building and what he is trying to do for anyone that is interested into trading through an AI agent.
You know, I would also add to that the beautiful thing about an agent is it removes any personal biases to some degree. Right, without an agent, you see what the data shows, you see where the market's going, but you still have this sort of feeling inside of you, right? And we've just seen over the years a lot of people just get absolutely cooked because they tend to hang on to something, you know, or not get out of a position, or do something because they have some underlying bias, right? That is potentially blurring their decision making. You know, so obviously the best traders in the world have an incredible amount of discipline. I would say potentially a lot of traders don't. And the beautiful thing about an agent is it balances that scale significantly.
Do you think it would be fair to say that perhaps it doesn't remove biases, but changes the types of biases we'll see? Because there are obviously human biases, but we've seen LLMs have different biases towards different things. They just form them in new ways. And also, I wonder, I mean, we're getting quite meta here, perhaps too meta, but do you think that perhaps that emotional strand to trading, which is generally, it seems generally a net loss, you guys have far more experience than I do in that area, but often you're working you're trading companies that are also run by people with emotions that may be making decisions that perhaps don't always make sense. And do you think there's perhaps still a slight human edge that the data can't capture?
I'd be curious to see Mikhail's thought on that. I would switch the word I use, bias, with emotion. Just taking a step back there when thinking about what the agent can do. And so, some of the greatest traders in the world will remove emotion, should I say, from their activities. And I think the agents at least have zero emotion, right? So it's not necessarily biasy, but they don't trade with an emotion, right? There's no revenge trading or no trying to double things up. It's just sticking to things that are programmatic. In terms of the biases, I mean, I think as agents get more and more intelligent, they're going to become, just make smarter decisions on the data that they have. It'd be difficult for me here to assess on how those biases may shift to the underlying question, but I do think that emotion is completely taken out of the picture, provided that you don't go and override your agent, which would defeat the purpose.
Mikhail?
Yeah, I think it goes both ways. So emotions can be a hurdle when it comes to doing trading, but intuition in some like edge cases can also be beneficial for yourself. So sometimes if you're a good trader, it's just like that stomach feeling that comes up because you've seen thousands of charts and scenarios before that just makes the decision for you. So it's kind of like a balance there, which then an AI agent might not really find that edge case in the framework that has been designed for the AI agent through whatever trading framework you have. But I do agree that 95% of the time, the execution through an AI agent and a framework will be way better than any general human being. But that then is all depending on what the human has been putting in as like the code of what it can execute on. Like if you do not have a good strategy, like for instance, if you go to any normal exchange and you see those grid bots over there, they are so simplified that they might work, but most of the time they do not work. It's kind of the same as if you go to a normal exchange and you copy trade a manual trader that has been doing well over the previous times. Neither of them are really successful because it's very complex to build the right one. But with AI, you're actually enabling people to be building it cheaper, faster, more efficient to lower the entire barrier of trading profitably. And that's where the edge case comes, or the actual case comes in.
Yeah, completely agree, and that's sort of the mission at Neyro, right? Is adding that intelligence layer way over and above what these simple grid kind of like trade bots are out there doing, because again, they for a lot of the times are only as good as their last series of trades, right? But there is at least in my research on the simplistic ones, no level of agentic intuition. It would be a good way of putting it.
All right, I want to talk more about the other side of this, which is essentially risk and security. Now, there's obviously the really trivial side where we've seen people give very basic AI agents access to a crypto wallet and it just loses it basically as quickly as it possibly can. But it's more complicated than that. And even when we build solutions that are sophisticated, there's still a number of issues. Andrew, what by building Neyro, you're obviously extra aware of these risks,
Yeah.
but what are the risks?
Yeah, I mean it's first and foremost, and so I'll look at this in sort of a few different parts, right? But for us at least, security here stands as the real alpha. I think you'll chat to anyone they'd rather not lose everything than make money, right? And like we spoke about this earlier, but the rate of change with AI is so significant, and things are moving so quickly, that you have a lot of platforms out there that are just on a race to ship faster, right? And by shipping faster, one of the shortcuts that folks may take, right, is to skip the necessary levels of security, because something works, it performs, right, and you get it out, but you leave that sort of cross your fingers, hope nothing goes wrong. And it's for some of the things that we've seen out there, it's an afterthought, right, or at least not a priority number one. And we made security a number one priority for us, because for us there was no point building something that works and can do things if it's not secure, and if people don't feel safe using it, right? As you guys both know, smart contract exploits are permanent in this market. There's no recourse, there's no insurance, funds are gone. And obviously the AI agents have execution permission, but a vulnerable contract exposes not just their funds, but potentially exposes the whole trading logic, right? And so for us, we really spent a lot of resources, time, and money on focusing on security. So us, I wouldn't say security is, it's not a feature, it's necessarily a foundation, and that returns and trust are built on for us. So yeah, first and foremost, just making sure that what we have there by way of smart contract is as secure as can possibly be. But it was priority number one for us.
Yeah, I saw you guys have done a few things to further that. One is the Hacken audit.
Yeah.
Why was it important to do that?
So, well, a few reasons, right? I mean, we can tell someone it's secure, and we can run our own tests on it. But having an independent third party actually audit something, number one, it's a great stamp and seal of approval. Number two, right, we want to encourage people to use our product, right? And knowing that it's passed an independent third party audit creates a far greater sense of trust than us saying trust us, right? So I know in crypto speak, right? It's don't trust, verify. So for it was like don't trust, like let's audit. And so we chose Hacken. It's one of the greatest respected smart contract security firms, as you know, out there, and they did an independent review of every contract function, access control, edge cases, and our goal here was really for them to break the code, to try and break the code, not confirm that it works, right? So every vulnerability found had to be resolved before any type of deployment. And again, I come from a TradFi background, and before doing anything large, the amount of diligence that goes into whether it's doing an M&A deal, right? Whether it's as Michael, as you would probably know as well, right? Whether you're investing in a startup or doing something, right? Unless you're looking to throw away, but you're smart investors, right? Smart traders, smart bankers are going to do the necessary level of diligence, right, to ensure that what they are being told is in fact what is actually there. And so that was obviously critical for us, and you can find our public audit report at hacken.io/audit/Neyro. And we currently now have a Cert K audit in progress, which will give us 2 independent returns from 2 leading firms. So yeah, I think Robert, just addressing your question, so security and making sure that users that are going to be using our platform know that we've taken every step possible, right, to ensure that things are safe and secure and doing what we say they will do.
Yeah, Michael, I want to come to you with this because when I've watched your content for a long time, and I've already blown smoke your way once, but I'm doing it again. I've watched your content for a long time, and the thing that I used to take from it was I was less interested in what you were investing in or what you were, not that you outrightly recommended anything, but I was more interested in the why, like why you were looking at something, which you were always quite good at breaking down. How much does security play a role now in what you're looking at? If you're looking at a new asset, there's a new protocol, a new token, whatever, how much do you pay attention to the security side of it?
I think, well, within our VC, we are taking security as one of the core pillars that needs to be done, well, whether through audits or whatsoever, to actually see whether the blockchain is safe enough. I think on that topic, we have seen some exploits taking place over the past few months, and I think that now people are too feared or too conservative against blockchains in general, and that they are not unsafe at all. It's just that we've seen some steps taking place with some protocols. It's not like every one of them has an issue. Within the fund, I think security, just like Andrew has been saying, is defined as risk, and if we can hedge and manage our risk, that is where we find our alpha. So whether it is risk in terms of having delta risk by just the markets going into a certain direction, we would like to hedge that as much as possible. It also comes in by building an algorithm that executes on its own. If we have some risk measures there or edge cases that we cannot manage properly, we need to do that first or change the entire size of the trading that we do. So risk is by definition the most important factor that we take into control, because if you manage that correctly, then the rewards will come anyways. So yeah, on all levels, it's important.
Do you?
Yeah, and I would say,
Oh, sorry, Andrew.
yeah, no, I was just going to add to that. I mean, look, even post the hack and audit, we even went, a step further than that, especially when it comes to sort of edge cases, right? So, we had hack and proof as an open bug bounty with hundreds of white hat, researchers worldwide simultaneously attacking the code. So really trying to find those novel attack vectors, different people catching different things. But again, yeah, just a incentive alignment, and with verified fines, and again, just really, I can't stress this enough, like such a big priority for us, because it only takes one loss, right? And it's very difficult to regain that trust. And if your code is vulnerable and there's a risk, it's very difficult to come back from that.
Mikhail?
I think I would also like to add that if you start reasoning about this, then AI and the fact that AI is finding bugs into blockchain is not really a miracle, because blockchains are still relatively new. But I think it's a thesis for blockchains and protocols in general, because once we start to find cracks in our financial system that we know, it's very hard to find solutions for that. So I think in the long term, it's actually going to be productive for blockchains. They still have the flexibility to change their entire plan and to change the layers and to change the code and all those things in order to make it more safe and robust going forward, which our financial system probably has not the options for.
Yeah, I mean, for now, so firstly, I fully agree. I think even if it hurts short term, it's good for the industry long term. But in the short term, you're still investing in the space. When you see audits from Hacken and from Certic, is that comforting? Is that the sort of thing you are looking for, Mikhail?
It's one of the factors. I mean, if you do not pass one of those audits, then there is definitely no reason to actually invest into the protocol. But I've also seen protocols that were passing the audit that I think are a little bit questionable, but I think that was like 4 years ago. So all of that has been improving massively. But once we are seeing some protocols that come onto our desk, we always check the team. We check like the tokenomics, we check product market fit, and one of them is security. And if you do not have an audit, then there is not a new stage that you get into.
Yeah, I think that makes a lot of sense. Also, Andrew, you mentioned an interesting part to this as well, which is hack and proof. I've been thinking about this a lot lately. Hack and proof is interesting because it's kind of crowdsourcing the problem, which I'm always a big fan of, and I think has a good history of being effective. And I think it seems to me that the best bet for analyzing the security of something is a mixture of crowdsource and AI. That seems to hit it from two different angles. Do you think that's fair to say?
Yeah, absolutely, and almost like a dual defense approach, in a way. So what Mikhail was saying was 100% right. If you can't get through an independent audit, well then why would anyone want to even take any step further, right? So for us, it was a necessary evil, right? You have to pass that known vulnerability, standard attack vectors, get the check mark. It's then the level 2, right, which is around the hack and proof, which then take it to the next level, right, which is obviously open adversarial testing, right? Novel patterns, that no single team may think to set. So for us, having that dual defense structure was critical, right? I think having the Certic and hack and audits done is just a a step, right? It's a first step, and it's necessary. It's not a nice to have; it's a necessary to have, right? So if you think about the the non-custodial architecture plus the dual audited contracts, right, puts in our perspective at least, one of the most defensible security postures in AI trading today. But again, we were really hell bent on having a kind of like dual defense structure and a triple defense structure if we can, right? But I could not agree with Michael earlier. We could not agree more. Sorry, with what he said earlier, that and what it is just a critical component to have to check the box. And those firms have come a long way since the early days of blockchain. They're held to higher standards, and we continue to see a thing. And then obviously, when you got a public bug bounty that is open, it's a verified trust signal, right? Reports are open; they can't be faked, and you have. Yeah, exactly how you said it, Robert. Sort of just open sourced people trying to find weaknesses and bugs in your platform.
Yeah, I guess one question. So I'm making maybe a few inferences here, and I could be wrong, but optimizing for security, it seems like to me, and again, layman, but it seems like the correct long-term strategy. If you want to succeed in this space, that feels like the right play. But it also, and this is the inference, seems very expensive and potentially short-term risky when contrasted with optimizing for things like hype, which obviously traditionally has performed quite well in the space if you are successful. What makes you sure that this is the right thing to focus on to make sure you have the best security?
I think you can everyone has limited resources, right? So you can choose to focus on hype, and that might be good for a while. And if things go wrong, ultimately that cost is going to land on the user. Or you can choose to optimize for security, potentially less around hype. It may take you potentially longer to scale or to get your viral moments or your hype things out there, but it's going to be more sustainable. You're going to be there for the long term, and you've got trust, right? And so it's a critical foundation. And if more of this had been done on more projects, we'd probably see a lot more people in crypto not having lost as much money as they lost, and we probably would have seen a lot more projects stick around for the long term. So there were a lot of guys that were sitting out there with good ideas, potentially good architecture, good things, and just got sucked into hype and shortcuts and very short-term gains. And unfortunately, we're left in a space where a lot of retail investors or retail folks really got rug pulled, and a lot of money's been lost in the system, right? And so part of leveling up, right, and taking things where they need to be is ensuring that resources and costs are the burden of the architects of the project, and not costs ultimately burdened by the users.
Yeah, I think this is interesting. Michael, I'm going to come to you with this. I think so. Over the years I've been in this space, I've seen myriad projects collapse. Some I've been interested in. And typically I'd say without the data, but I'd say that the most common cause was probably some kind of rug pull, maybe a hack. They certainly did increase in terms of how, bad they were for the project. Now it feels slightly different with AI potentially now unearthing who knows what as the LLMs get iterated on. Michael, when it comes to investing in projects, do you think now a sort of, I don't want to load the question by saying a catastrophic security failure, but a security failure that's not nothing, do you think that's going to be terminal for projects going forward? Is it going to be harder and harder to survive that?
I think it is, yeah. I think I've had Sergey on the show once, Sergey Nazarov, and he said blockchain protocols aren't built for the 95% that they work. They need to be built for the outliers. And I think that's the core of it. If it cannot, like, if there is an outlier or if there is a crash and it collapses during that period of time, then there's no reason to actually use a blockchain, because the blockchain needs to be working through those periods of time and not when everything works smoothly. So I think like in many of those cases, it's going to be a big issue to overcome that. But I think in the other way around, if protocols are being built in a way that's actually safe and secure, it's going to take a lot more time for it to actually get that hockey stick in terms of adoption, because the players that they are attracting to actually use the blockchain are different and have higher safety measures or security standards. And that's probably why we see a lot of protocols at this point not really taking off yet, because they're still building those security layers within their own protocol. And if you reason about that, then I think that a lot of protocols that exist since 2017, 2018, 2019 that might not appreciate in terms of asset price or token price yet, they have been fundamentally been growing even more through the bear markets in order to actually make sure that once the network effect kicks in, they are ready to do it on a secure and safe way in order to actually increase the crypto adoption.
Yeah, to follow that up, and I think I'm going to put this question to both of you, but Mikhail, I'll stay with you for now. With the shift that we've seen in the space where, 2017, 2021, it was very retail driven. Now it's more institutionally driven, and you go to most events and you'll see that there's a lot of evidence for that. Now it feels like the security problem's even bigger because institutions have stricter guardrails, they have more due diligence. So do you think that institutional element, to get the institutional money into these sorts of things, your security has to be even better than it was when retail was the primary driver?
For sure. I think it requires a lot of more security standards to be involved, but it also requires a lot of law and regulatory forces to be making it compliant so all those institutions are actually able to execute on chain. I think we are in that stage, but it doesn't mean that we can't attract retail interest anymore. I think that the recent SpaceX IPO that we've seen actually brought a lot of people into tokens again, because on chain you were actually able to trade the asset 24/7, and you were actually able to do it in a lower slippage, lower fees, and all sorts of things. So maybe we have been saying retail is not interested, but all of a sudden, by what we have built for institutions, becomes interesting for retail as well, and then attracting all of those groups in there. So in that aspect, and the years that we have seen over the past 4 to 5 years, where all those protocols were building, I think we are on it's the first quarter of the match where we get into that hockey stick, or in terms of adoption. Either it's going to be decentralized AI, or it's going to be decentralized compute, or it's just going to be on-chain trading of RWAs, or all those narratives, and DeFi comes along. But I think we are actually at that stage, and you can just see it happen over the past few weeks already.
Yeah, Andrew, before you jump in, I think you're completely right. And yesterday, Binance shared a report before the show, public report, anyone can look up, about their tokenized stocks. And SpaceX one became almost immediately their second most traded asset on the entire platform behind Bitcoin. So I think you're right that the retail interest is there. It's perhaps, it maybe just got a bit stale after FTX. There was obviously the big hype, it collapsed. I think maybe we just needed to grow a little bit as an industry. Andrew, you've got obviously a background in traditional finance. What do you make of this?
I think, it's not like we exhausted all of the retail interest in 2017, in 2021, right? Each time we see new evolution or new something, we garner a next kind of like wave of retail interest. And I don't think you'll see institutional adoption without a high level of retail interest, right? And so I think they're going to work in tandem, side by side, to get to sort of what Mikhail was saying. And but again, I think good projects, right, that really are there for long term, like SpaceX is a phenomenal company, right? So anyone who is interested is going to find the path of least resistance to be a part of that action, right? And so the SpaceX thing didn't surprise me at all. And I think blockchain just made it easier for a lot of retail investors to actually be a part of that story, right? And not limited to some of the more TradFi platforms. So honestly, that doesn't surprise me at all, because if you're sitting with funds on Binance or wherever they are, and you see SpaceX and you've got a long-term view, and you kind of like see what Musk's mission is, yeah, you would want to. Why wouldn't you want to be a part of that? And so as we see new products coming out that are potentially crypto native, I think what we've also seen is a significant increase in the level of intelligence of retail investors. I think retail investors have seen a lot of horror stories, and I think they're just getting smarter and smarter. I agree with Michael, like the right level of regulation, it forces folks to do the right things, the level of trust. So I think we might see a renaissance or a re-emergence of retail funds flowing back into good projects. I think what's changed from now to 2017, I think if in 2017, if your company's mentioned blockchain, right, and you were one guy sitting in a basement somewhere, no, really, you with the right level of hype and Twitter action, you could have got people there. And I think hopefully those days are gone, and now it's really allowing people to take positions in companies that are actually going to be creating things. I also think where we've evolved here is just typical blockchain is now companies are forced to actually do something, right? You can't just have something that's on blockchain and expect it to be successful, right? Blockchain, like if you go back to the early 2000s, right? Man, if you were an e-commerce company, you were like all the hype, right? Every company's an e-commerce company today, right? Pretty much everyone has a website and they can do things like that. I feel the same way about blockchain, right? Over time, right? Or maybe I shouldn't say in blockchain, but I feel the same way just even about like tokenizations. Over time, I don't think we're going to refer to things as tokens anymore. It's just going to become a part of that. I own a piece of this. It's the same way I feel about stable coins, right? They're called stable coins. If you fast forward into the future, this is just going to be currency, right? The kids today that are 5 or 6 are not going to know something is a USDC stablecoin. They're just going to be like, I wanted to buy something, and this is how I bought it because that's how I spend money, right? And so I think you're just going to see the conversion of that, and it's not going to be, oh, this is a blockchain company or this is a crypto company. I think those words over time will still exist, but they won't mean what they mean today necessarily. It will just be the way regular companies are built, the way they choose to track inventory, the way they used to track shipping, the way they used to do things. I just think it's going to come there, and I really believe that the same for stable coins. Then they will not be called stable coins in the future, right? You think about it, when the dollar depegged from gold, right? We didn't call it a stable dollar, we just called it a dollar, right? But it was effectively a stable dollar because the stable element was the government, right, to some degree. But it's just, so anyway, that's just fast forwarding it into the future. But so what I think, just more holistically, I think good projects now that are really doing things meaningful are going to probably see way more action than they would have seen in 2017, and I think it's going to be really difficult for people with scams or things like that to keep kind of getting away with it, right? I think that's my long-term view.
Yeah, I mean, it's hard to argue with any of that, and although the ICO boom was a special time, it's hard. It's going to be hard to replicate that, and I think it's also, we're focusing more on the problems it solves. I mean, we've mentioned SpaceX a few times, and Andrew, you said it was people are flooding towards the path of least resistance, but they're also flooding to, in some cases, the only path to get exposure to SpaceX, right? Like that was the only way they could do it, is by going through that, which shows it's solving a problem. Mikhail, do you think that this is all just going to move to the back end now, and we're going to talk less about blockchain, and potentially, maybe 10 years from now, talk less about AI, and it's just the stuff that works in the background? In the same way we don't say, oh, we're an online company anymore. It's just, the default.
I think it becomes the standard at some point, and ultimately, if my parents are using an app and they do not know that it's blockchain, just like they don't know it's HTML, that's when we really achieve network adoption and like real adoption and innovation. And I think over the past 5-6 years, blockchain protocols have had a garbage UI or UX, where if you need to go to MetaMask and click buttons to actually execute a trade or swap something, it's like doesn't make sense. And I think the entire industry has learned this part. So in a year or 5 or 6 from now, we probably won't be using the word blockchain. It becomes the standard, and the standard is never being named anyway. So yeah.
Yeah, I agree. And the UX point is salient. And it's funny how many people I've spoken to in the space that if I say to them, what's been the biggest fault or the biggest problem with blockchain in the last like 5-10 years, to a man, they've said UX. Eli Ben Sasson has talked about it extensively. That remains the biggest problem for us going forward. Look, we're approaching the end of the show, gentlemen. It's been a fascinating conversation. Andrew, let's come to you. For anyone that's interested in Neyro, where do you want to send them?
I would. There's only one place to send them, but can we send them to Neyro.network?
Okay, perfect. Mikhail, any final thoughts you want to leave the audience?
The only thing I could say is thank you very much for being here. Make sure to check out our podcast, New Era Finance. We have got 4 stellar guests coming up. So just look that up on Twitter, YouTube, Spotify, whatsoever. That's it.
Amazing. Gentlemen, thank you very much. It's been a pleasure. That is another episode of Chain Reaction in the Can, Cointelegraph's daily show, here live on X and YouTube, usually at 3 p.m. London, 4 p.m. Paris, 6 p.m. Dubai, 10 a.m. New York. Tomorrow we're going to be the same time as today, so it will be 3:30, 4:30, 10:30, 6:30. And again, we've got Jay from BlackRock talking about the Bitcoin ETFs with yield. So thank you very much for joining us, and we will see you again the same time tomorrow.
Thanks, guys.